Sure, everybody likes big, solid dividends.
I have a plan.
It's the main reason why many investors pursue real estate investment trusts.
You've got a plan.
But a sizable payout and solid cash flow aren't enough to make a REIT a sure thing.
I have part of a plan.
And it can be hard to make astute choices while adding real estate to your portfolio.
I have an idea.
Brad Thomas, editor of the Forbes Real Estate Investor, looks at all real estate investment trusts to separate the smart picks from the fool's gold.
What one man can do, another can do. Say it again. What one man can do, another can do. Say it again.
Each week here on Money Life, Brad brings you one choice to consider for your portfolio, looking at its pros and cons.
Whoa, now slow down.
So that you can make well-informed choices in managing real estate within your investment portfolio.
What one man can do, another can do.
So put your thinking cap on. It's the Intelligent REIT of the Week.
Yeah.
Right now.
That's right. It is the Intelligent REIT of the Week. Brad Thomas, editor of the Forbes Real Estate Investor. He definitely raises up the show because most of you listen to me talking and think about our show this way.
No signs of intelligent life forms.
Yeah. Well, there are signs of intelligent life forms, and specifically they come from Brad Thomas. If you want to learn more about the Forbes Real Estate Investor, go to Forbes.com/newsletters/Forbes Real Estate Investor. Or you can go to iREITinvestor.com to learn more as well. And Brad is on Twitter. He's at Swan_investor. But right now he's here just off the holiday weekend. Brad Thomas, welcome back to Money Life.
Hey, Chuck. Great to be back on the show. Thanks so much.
Our Intelligent REIT of the Week is
Tanger Factory Outlets.
Tanger Factory Outlets. It's ticker symbol SKT. A retail REIT. If we're looking for shopping center types REITs, why is Tanger an intelligent pick right now?
Well, Chuck, let's start with some fundamentals with this company because the outlet space is nothing new. This sector has been around a long, long time. In fact, arguably Tanger was the pioneer of the outlet space. The company started around 33 years ago. They've been public about 22 years. And when we look at the historical relevance of that, Tanger has increased dividends for all 22 years in a row. So certainly you can see the power of the outlet model and how Tanger has been able to successfully maneuver multiple recessions in the retail business.
So we're looking at a REIT that should be looking good right now because we've got economic conditions that say, yeah, everybody loves a bargain. You're not going to find any better bargains necessarily than you get by going to the factory outlet centers. But that it's not necessarily a bargain from the yield perspective. I mean, you talked about how the dividend has been consistent and growing, but right now with Tanger trading around $34-35 a share, that would be a yield of about 3%. It's good. It's not, oh my goodness.
Well, the yield is certainly not as high as some of the other REITs, especially some of the healthcare REITs and some of the triple net REITs. But again, when I look at valuation, it's not just yield. We talked about a sucker yield in a previous show. You know, again, I'm a value investor, so I look for companies that have really blue chip characteristics. And by the way, I believe Tanger is a blue chip. When I consider the company's fortress balance sheet and the fact that they've only got 14% of their assets are unencumbered, total debt to total cap of 27%, investment grade ratings, BBB plus with S&P. So when I look at this company and how strong their balance sheet is today, and also when you look at the fundamentals, their occupancy rate last quarter is around 98%. When they open centers, I was at a grand opening with Tanger a couple weeks ago. This was in Savannah, Georgia, a new project. They were about 99% occupied on the grand opening, the day they opened. That's virtually 100% occupancy, and you're seeing that in every one of their centers. Companies like Kenneth Cole, Gap Outlet, Michael Kors, Cole Haan, Nike, you know the players. So they've got a high-quality portfolio, very strong, very durable occupancy, and combine that with their fortress balance sheet. So, again, that's how this company has been able to spit out dividends 22 years in a row and growing.
And so what we're really saying here is, although we're making it the Intelligent REIT of the Week, this is the kind of thing that you're not buying for a week or a short-term play. You're making this a cornerstone of a REIT portfolio, but this is a building block, right?
Absolutely, Chuck. And again, I mean, dividends are essential. I mean, I certainly am not going to argue the fact that, you know, would I rather have a 5 or 6% dividend yield? But listen, we're talking about total return. That's why you invest in securities. You want capital growth and you want dividends. REITs just happen to pay out nice dividends. The story here with Tanger today is the shares are on sale today, and I think it's definitely become an attractive stock to own right now.
What's a reasonable outlook in terms of total return and over what kind of time period?
Today we're talking about a company that's trading at a 16 multiple. That's based on funds from operations. Compare that to the peer group, which is Simon and Taubman and some of the others that are trading at. Simon's trading 19 multiple, Taubman at 23 multiple, and Macerich, who's been under attack with Simon, is trading at about a 21 multiple. So this stock's trading at about 4 clicks below the peer group in terms of their valuation. They definitely have fallen off. They're down about 8% year to date. Those peers that I just mentioned, those 3 peers are down about an average around 1 or 1.5%. So we're definitely seeing this stock on sale. I would say if you get in at price today, and by the way, I just added a few shares recently to Tanger. I do own the shares today. I would say 20% would be a good target for this stock. Again, I'm not a timer, but when you look at the historic pricing of this company over the last few years, and really even last year moving into this year, you can see in January there was just a slide. And one thing I did want to say about this stock too, Chuck, and we always want to consider the risk. The outlet space is definitely evolving, and now you've got a lot of competition in that space. 10 years ago, Tanger was really the only outlet player out there. They're still the only pure play outlet REIT. Mm-hmm. But you've got companies like Simon and a lot of private companies that are now getting into the outlet space. It's definitely a hot sector to get into. But what I like about Tanger, what they've done to kind of defend against some of that competition, is they've partnered with some of the best-in-class REITs like Simon. Tanger just announced they're partnering with Simon in Columbus, Ohio. Tanger's got JVs up in Canada with one of the bigger REITs up in Canada. So what I like about Tanger is they've been able to adapt to the competition in the space. And again, you just can't argue with the fact that this is one of the few REITs that have increased dividends in that period of time. They paid through multiple recessions, and there's a lot of retail REITs that can't say that today.
You put it all together, and ironically, it sounds like a no-brainer, but that's actually why it is the intelligent REIT of the week. It's Tanger Factory Outlet Centers. The ticker symbol is SKT. And if you want more information on this pick or any of Brad's picks and his newsletter, go to Forbes.com/newsletters/Forbes Real Estate Investor, or go to iREITinvestor.com. You can also get more information by following Brad on Twitter. He's at Swan_investor. And if you follow his Twitter feed, that'll lead you to his pieces on Seeking Alpha and elsewhere. Brad Thomas, thanks so much for joining me on Money Life.
Thank you, Chuck.